Well, actually, I've been trying to balance what I've been doing this over the last 2-3 weeks. Effectively, I'm looking at what has worked and trying to re-underwrite that can continue to work. To some extent, though, I'm also taking losses. And I think that is something that is part of the tape and the tape dynamic. When you have about a third of the long-only, the mutual fund money, having fiscal years that end next week, I do think portfolio managers are looking at things that haven't been working and a little bit more aggressive at exiting those positions and taking those losses to be somewhat tax-friendly for their investors.
Can you give us some examples of what you're ditching that hasn't been working? I mean, has it been fun? There's a lot actually to pick from, Jack. Financials, industrials, transports.
I do think you hit on a couple important points. If you look within the market, you certainly see the cheapest sectors, the sectors that trade currently cheaper than the S&P as a whole, wind up actually being very globally sensitive. You see the financials, you see the industrials, the materials and energy. And I certainly have looked through and I've taken some losses in the financial sector, some stocks which haven't quite worked the way we would have underwritten to when we put those positions on. I think you've seen some losses. We've taken some losses in the industrial space as well. And I think those were less about more macro calls and more about theses, an idea that we had that didn't quite play out the way we anticipated as quickly as we anticipated.
Yeah, and you're not alone, Jack. Let's point that out too. Kenny, when you go in on a day like today and the market's basically open at lows, and here we are, we're about off 1% off of the session lows. How does it feel? Because we're going into the hour, the 2 o'clock hour, where things seem to get tricky often.
Right. It's funny, I almost want to say it feels like they're going to close them up on the day, although that's a little aggressive because I don't really think it's going to happen. But it kind of feels like it as we approach the 2 o'clock hour that they're not getting panicky yet, although I do think they will at the end of the day. I think you're going to see another push down in the last hour of the day. But, even when we were at the complete lows on the day, there wasn't this sense of panic at all. And quite honestly, although I was a seller in some names, I was actually a net buyer today for some clients, right? And so therefore it was very interesting to see that they were being patient. They weren't being aggressive on the buy side because they didn't need to be. But net, I was a net buyer on the day. So it's not a sense of panic at all in the markets.
So, Kenny, of all the headwinds that the market seems to be facing right now, including, as Michael Farr told me about an hour ago, the headwind caused by you moving your arms vigorously, that this creates a headwind of its own. Which one is the one that has you most troubled?
Listen, I got to be honest with you. I think, the interest rate story and the trade story, I think that's kind of old news. It's sitting there, it's simmering. I think the one that's really bothering me the most is much more the geopolitical issue and how this potential Saudi thing could spin out of control if they start imposing severe sanctions, right? Because think about all the U.S. multinational companies that could potentially be affected. They don't want it to happen. They're trying not to make it happen. But if this situation gets uglier and uglier, there's that real potential. And so that's kind of the catalyst for me that I'm kind of sitting out there watching to see how it unfolds. If they solve that problem, then I think the market settles right back down. But that's really something I think it's out of left field that people should be paying attention to.
Interesting.